Good morning, Cav. Good morning, good morning. How's everyone doing today? I'm a little early. Hey, Chef, nice to see you. I'm a little bit early today. I know that I am. I hope you guys are okay with that. I won't get the education really going. Um, Had a realization this weekend. And it's kind of cool. And I've had this realization before, and sometimes I have to have it for it to kick in. Have you guys ever said, what's your thing? Like, everybody in the room, let's say you're great at seeing your trades, right? You go back, you find them, they're good. What's your thing, guys? What's the one thing that's keeping you from finding your goals? Mine is I tend to go too soon sometimes. I get excited about my chart reads, I get excited about my trades, and rather than waiting for them to set up properly, sometimes I enter a little early. This is my thing. I did it on this one. It cost me $180, and then I take the right one and I get it back, but it's that's my thing. How do you avoid having your thing, right? How do you avoid doing that one thing that keeps you from making money or doing that one thing that keeps you from making the most possible money? Cav, you do that too? And I think that it's kind of cool. I did a lot of replay this weekend, guys. I mean, I probably did 7 days worth of replay. Um, and it held true on almost every day in the first 4 or 5 days. Good morning, Debbie. And then I said to myself, I said, all right, well, this is my thing. And I don't know if you guys ever read notes that you put in front of you, but I put a giant note in front of me that said, hey, just take a deep breath. You know that it's coming. Just hold off and get it. And I don't know, it helped me. So I think that knowing what your thing is, some people jump in early, some people jump out early, some people fight triggers. Some people trade in determination conditions, guys. Everybody's got a thing. Yeah, Gary, looking in the range chart. So maybe minimize it, right? Minimize the range chart until it's time. Because I don't care what you're doing, the large chart leads the way. I think it's great, guys. Just a little self-realization. Want to say hello to everybody. I see a lot of names in here that I haven't seen in a while. Swiss Templar, welcome to the room. Richie Rich, welcome to the room. King Wales, welcome to the room. A lot of names that I haven't seen before or seen in a while, so it's great to have you guys here. Um, I remind you guys that this class is very much a discussion rather than a lecture. The first hour doesn't always feel that way because in the first hour we're going to talk about rules. We're going to talk about rules for the high probability trend trade. And then after that, I just want to hear what's on your mind. I want to hear what you need help with, and I want to work with you to get to where you want to be. I'm super excited. My brother's first class starts today. I can't wait to hear how it went this afternoon. I've been taking it. It's pretty outstanding. But we're going to build the foundation. We're not going to worry about what they're doing. We're going to focus on us and building that foundation and setting up for the absolute best of the best and giving ourselves the highest chance of success. Um, I like it, Gary. Just shut them down, right? Too many mind. Too many mind. And I love that you did that. And that's another great self-actualization moment, right? Guys, if you're not good on one, what makes you think you're going to be good on three, right? If you can't find one trade effectively, why are you looking for 12? So we're gonna embrace that. Nice segue, Gary. We're gonna take it into simplicity, guys. But before we do anything, I always go to forexfactory.com. I always check my news and make sure that I'm not jumping in front of a freight train of emotion. And today at 10 a.m. we have new home sales. Doesn't matter if there's a lot, if there's a little, whoops. Doesn't matter if it's good news or bad news, guys. But what we do know is that it's got an orange box, which means that it has a medium impact, which means that the market may it may bounce, it may jump, it may spike, it may reverse from absolutely nowhere. It may just trade too fast to keep up with. So when you see medium impact, when you see high impact, it's okay to go pour another cup of coffee, dunk a donut in it, right? Scratch the dog, high five your wife, whatever. Do anything other than jumping in front of it. And then when we talk about the day and what we're doing here, guys, everything comes from the education page. There are no secrets with us, which I think is pretty outstanding. There is no let's not give them enough to succeed, right? I'm going to help you build a foundation. I'm going to give you everything that you need to be successful. I'm going to tell you right now that there's a lot more that you can do beyond what I teach. But it comes from the foundation that you build with what I teach. So, straight from the education page, I want to give you this one first, guys. This is your um, software user guide. This is your how-to on NinjaTrader. This is the one that's going to help you if you have any questions, whether it's moving charts, setting up stops and targets, opening, closing workspaces, all the basics, the rigamaroos, if you will. With NinjaTrader, you're going to find answers there. But of course, I do encourage you, ask in class if you have a question. I'll do my best to answer it for you. And then we've got the tutorial section, and this is where everything that I talk about, every rule that I talk about, every pattern that I talk about, you're going to find them here. Again, no real secrets. And I'm going to go straight to the glossary of common terms. If you're brand new with this, if you're wondering what the hell we're talking about in here, here's a lot of them. A lot of the things that you're going to hear in class. Notice that it says, please post pics or questions. This is in the glossary of common terms because this is really one of the most important things that you can do is posting those pictures, posting those questions, opening the door for conversations. Um, but I want to show you straight from the glossary, high probability trade. This is our focus for the first hour, guys, the high probability trade. This is a trade where every indicator on every chart agrees for the trade. Your triggers are the strongest. There's nothing in the way. Guys, this is the foundation. This is the one that it's going to set you up for long-term success because this is the trade that teaches you to read your charts. And straight from the three trading rules, the high probability trend trades, this is what we talk about for the first hour. We go through each rule, we break it down, um, what it looks like written out and what it looks like visually. Because chart reading is about 90% of your day, guys. Chart reading is looking at your indicators, taking the information and deciding whether or not that statistical advantage is present for you to take a trade. The other 10% will be actually taking that trade. So tell you right now, guys, we're professional waiters. We wait for the best and then we pounce when it's there. And that's what this first trade, this high probability trend trade, is designed to do, is to teach you to recognize these advantages at a moment's notice. And you'll be able to open up your software. You're going to look at your um, workspaces and you're going to understand three very key concepts. You're going to understand first where the market is likely to continue, and this becomes your entries for the highest probability trend trade. You're also going to understand where the market is likely to go. This is going to allow you to take profits in appropriate areas. And then finally, you're going to understand where the market is likely to stop. And I don't want you to underestimate the value of where the market is likely to stop because that really does so much for us as traders, as chart readers, especially using the software. One of the absolutely amazing things that you're able to do is to be able to see these Fibonacci areas in the distance, to understand when they're likely to stop or reverse the market, because these likely to stop areas are what we call termination conditions, and they can stop a trend flat. They can create bounces that are untradeable, and in many instances, they can reverse the market. And when they reverse the market, they create an anchor for the highest probability trend trade that you can take. And this is what we call the first 30 days and beyond. This is what, if you're brand new, if you're really getting your feet underneath you, this is what you should be focusing on, is the high probability trend trade for the first 30 days. That trade that typically happens after a reversal in the market, when the market comes from one of those termination conditions. This is a trade that has the potential to win 70 to 80% of the time. This is a trade that creates confidence through the memory of success. And this trade is our focus for the first hour every day. Um, and this is a trade that only has three rules, guys. I'm a big fan of simplicity. You'll find that with me. I'm not a huge fan of thinking about things that don't give you an advantage. I'm not a huge fan of more indicators, not a huge fan of more charts. I'm a huge fan of keeping it so simple that even the brand new brain can process it. Because what happens is when you get great at this high probability trend trade, guys, all the doors open. Everything kind of sorts itself out. and you will begin to see more because now you're a chart reader. You're not trying to be a day trader. So these three rules each create an advantage. The advantages are in yellow. When rules one, two, and three are met, you will have the advantage of momentum, a market that's likely to continue in the direction of the trend. You'll have the advantage of a clear path. You'll have a market that isn't running into one of those likely to stop areas. And then you will have an entry area, and it will be pinpointed down to that point where the market is likely to continue, guys. And these three rules, three simple rules, we're going to talk about them in great detail. Let me put them in the room for you. These three rules will come to fruition on only two charts. Again, simplicity. I can't stress that enough, guys. Everything begins with a large chart. You may have seen Gary wrote it in the charts. Let the large, or in the chat room earlier, let the large chart lead the way. The large chart is what the people in control want to have happen. The large chart is what the large crowd, the people with the money, the market movers, this is what they want to have happen. These are the guys that are going to define your areas, your direction, your momentum. Guys, the large chart leads the way. And when you trade with the large crowd, you're typically trading with the people that are creating the advantages that we look for. On your large chart, we will define direction, which way we should be trading. We will define momentum, making sure that that advantage is there through rule number one. And we're going to identify areas. And when there's none present, it gives us that clear path from rule number two. Your first two out of three rules happen on only one chart. And then when they're met, you guys will go to the smaller, faster chart, your entry chart. And this is what the small crowd wants to have happen. Those yahoos that are willing to fight trend, that are willing to fight momentum, they're going to push you back right to the perfect spot, guys. The best of the best, that area where the market is likely to continue. So your smaller, faster chart is nothing more than an entry chart. It's going to take one bar, that broad stroke on the large chart, and it's going to refine it down to 15 to 30 bars, and it's going to give you that advantage of pinpointing where the market is likely to continue. It'll allow you to reduce your risk. It'll allow you to maximize your profit potential. So we're going to keep it very simple. We're going to focus on two charts. We're going to focus on three rules. Um, and then I'm going to remind you guys how to get to where you want to be. If there's anybody in this room that isn't interested in making money, welcome. It's great to have you. But we're going to focus on the easiest way to get into that scenario. Your step-by-step path to becoming a confident trader ASAP, it starts with posting your trades in the class, guys. It starts with telling me, hey, good morning, Carl. Telling me what you're doing, telling me why you're doing it. There are no wrong answers. I can't stress that enough. Every time you post in the room, it's not me saying, well, you're right, you're wrong. It's me saying, let's look at the advantages. Let's talk about the disadvantages. Tell me why you did what you did so that I can get into your thinking mode, so that I can understand what you're seeing and what you're reading. Show me where you enter, and maybe we can work together to find a better one. Or if it's the best one possible, man, I'm going to virtual high five you guys. I'm going to be like, yes, I don't think you could have done that any better. And tell me where you got out and tell me why you got out. Guys, because remember that everything we do, every picture that you post opens the door for a conversation. And that conversation for you is a private session. It's literally you saying, this is what I see, let's talk about it. And we will. And I promise you, there's nobody that can't move forward with a little bit of feedback. And then next, I want you to use your spreadsheet. Nexgen gave you a spreadsheet. It's in your Nexgen Study Picks folder. For whatever reason, people struggle finding it, so I'm going to give you a copy of mine. There it is. I just dropped it in the room. But guys, this spreadsheet begins as your trade journal. Every time you take a trade on Simulator, post it in the spreadsheet, on the first page of the spreadsheet. It's going to talk about the trades you took. It's going to ask you how you felt, because that has a lot to do with your ability to follow rules. It's going to ask you about the conditions, and it gives you a section for notes. And guys, this notes section, hey, good morning, Dan W. Nice to see you. This notes section is when you get feedback, put it in the notes section. And what you're going to do is every morning, I want you to study what you did yesterday. If it's Monday, study what you did last week and ask yourself what worked, what didn't work. What felt easy and kept you relaxed? What felt forced and made you nervous? This spreadsheet is also amazing as you start looking for more trades and developing a plan, because you're going to see patterns in the market that are making you successful. And most importantly, guys, you're going to see patterns in yourself. And I think that that's where the feedback really creates an advantage for you, is one of the things that I'm good at. I have a memory that upsets my wife, is I see the patterns in you. I start to see what you're doing that's bringing you success and what you're doing that's taking it from you. And then we work together hand in hand, walking off into the sunset to fix anything that needs fixing, guys. And that little study each morning, 5 minutes while you drink your coffee, it's going to prepare you for the day and accelerate the learning. And then the spreadsheet's got a couple other pages too. The second tab is your favorite looks tab. As you begin to grow your plan, as you begin to recognize these trades that you want to take, that want to be a part of your methodology, um, you're going to put pictures in there. This is what it looks like because I want to know what it looks like because I need to recognize it when the market is moving and having these pictures. Hey, good morning. Nice to see you in here, D-Rock. Having these pictures that aren't moving makes it easier to know exactly what you're looking for. And then finally, I've got the client trade section, guys, and I've been putting this one together for a year or two. Some days I take more than I did other days. But these are next-gen users using the software. These are next-gen users embracing the advantages that we're about to talk about. Good morning, DJ. Good to see you. Um, it's going to talk about management and patterns that repeat themselves. There's a whole section on termination conditions. This was my challenge as a new user, was trading into those termination conditions. But there's about 270 pictures of what can be done with the software. Hey, good morning, Joel. 270 pictures from next-gen users. Some people saying, hey, look, this is what can be done if you study. This is what can be done if you practice. This is what can be done if you just have a plan in place, guys. And this spreadsheet will yield dividends. It's amazing. Good morning, Bobby. Um, so post up in the room. The person that posts the most gets to where they want to be the fastest, guys. I promise. Don't be shy. Kareem, don't be shy. James Bird, don't be shy. If you're brand new in here, guys, just start posting now. Say hi. Say hello. Let me know that you're not afraid to drop a message in there for me. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. The idea is that you simulate them, that you practice them, that you screw them up every chance that you get. Good morning, Kareem. Because when you make a mistake, guys, it puts your brain under a little bit of duress, and that's okay. It's not going to kill you. But every time you do that, your brain tries to overcome the problem that it just experienced. So if you make a mistake and you identify it as a mistake, it's easier for you to overcome and to not repeat that mistake. And if you put your trade in the room, we can identify it together. I'm going to tell you guys right now, I'm a pretty warm, fuzzy guy. I'm about as hippie as they come. I am looking for successes to celebrate more than I'm looking for challenges. But we're going to identify the challenges so that they can be avoided. And the idea is that you trade the correct rules, that you take a second and make sure that you have those advantages in place. Because while getting lucky is a short-term victory and it feels good in the moment, it typically sets you up for long-term failure. We're going to simplify drastically today, guys. We're going to talk about a high probability trend trade. That's going to be our main focus. We will talk about what we call a medium probability trade. That'll be the second trade. And that's when one of those advantages goes away, which means that it's not a trade that typically wins 70 to 80% of the time. It means it's not a trade with your highest chance of success. It's a trade that has a challenge, and your chart reading is going to have you managing it a little more assertively. But you've got to learn the looks so they're easy. Can't stress this enough, guys. The more pictures that you take, the easier it becomes. I did market replay this weekend, and I do it probably 3 or 4 days a week. I go back. But I want you to see this. What's today? The 27th? Guys, these are all pictures. Oh my gosh, that's the 18th. I've got almost 7,100 pictures in here, guys. Almost 7,100 pictures. And I'm telling you right now, with 7,100 pictures, I'm pretty good. what looks are easy. I'm pretty good at catching these advantages, and I want you to be in the same boat. So write it down on a piece of paper. I will, all caps, take 15 pictures a day. Because 15 pictures a day is 75 pictures a week, and that's 300 pictures a month. And I'm telling you guys, after 300 pictures, stuff gets easy. Imagine 90 days in when you're up to that like 900 pictures. It gets even easier. The more you put into it, the more you'll get out of it, without a doubt. So I'm going to put this in the room. This is your step-by-step path. And now I want to go over the rules. Are there any questions before we start? Guys, I'm going to tell you that the first hour is kind of a lecture. We're going to talk about the rules, what they look like. It's imperative that if you have a question, you stop me, you interrupt me. I've never been mad about somebody asking questions. Even if you ask the same question 10 times, I'd rather see that than for you to suffer in silence. And then the second hour, we're going to look at all the pictures that you guys post in the room. We're going to look at the work that you've been doing. We're going to answer each and every question that you need answered. And it becomes really a lot more interactive. So have a notepad out. If you have a question, write it down. Make sure that you get it into the room. The more questions you ask, the more likely I am to have a job next week. So you know I appreciate it. So let's talk about rule number one. Strong trigger lines, guys. Remember, the large chart leads the way. Strong trigger lines. How do I find them? Well, first, I have to determine which direction I'm trading, guys. And it's pretty simple. On the large chart, if the background is green, the trend is up. I'm only looking for rules to be met for high probability trend trades long. If the background is red, the trend is down. I'm only looking for rules to be met for high probability trend trade short. And guys, I'm going to show you how easy this is and how amazing you are as students. This is the most current bar on crude oil, and the background is red, guys. Are we looking for longs or shorts? Are we looking to go up or down? New users, this is your gimme question, so you feel comfortable answering in the room. Are we going up or down, ladies and gentlemen? Work with me here. Humor me. Down, absolutely, chef. Guys, just a heads up, chef's already good at this stuff. The S&P, the most current bar, has a red background. Once again, down. If I shifted over this way and the background was green, guys, we would be looking for long trades. And it really is that simple. That's the first thing that you should be looking for, because you can't have rule number one if everything doesn't match, if the background and the triggers don't match. Because rule number one says that you have to have strong triggers. Excuse me. Strong triggers mean that your small triggers, these solid lines, your large triggers. DJ, what does that mean? Show me a picture. Tell me what's going on, man. Let's see if we can fix it. And then, of course, guys, just a little reminder. I'm not so bad at helping you guys out with technical problems. I've broken pretty much everything that can be broken. But we do have Jason in tech. So if you always have if you have a challenge, don't be afraid to go in and drop a ticket quick. Are they all gray, DJ? What is the date on your crude oil chart? Because that's the S&P. Is it 124? Or are you still trying to do 1223? You are January 24. This morning, before you opened up, did you get rid of the cache and tick from the database folder to clear it out to make sure that you had fresh? So that's a good practice every day. Are you set to Eastern time frame on your computer? Cool. So try this, DJ. I think this is probably the easiest way to do it. One more thing before I ask. How many days back are you? Are you 10 days back? Hey guys, this is the troubleshooting, the brainstorming that you'll go through in your head every time you have a challenge. These are the easy things. These are the I don't need Jasons yet. So DJ, 10 days back, right click, data series, 10 days. We lost you. 5. So that's going to make a huge difference because my chart's going back 10 days looking for fibs. Yours is only going back 5. I have twice as many swings that are working their way into the calculations as you. So if you want, turn it to 10 and let's see if we line up a little better. I love troubleshooting though. So we don't have the same charts because we're not getting the same information. So guys, let's talk strong triggers one more time. When the background is green, my small triggers should be green. My large triggers should be green. I don't make recommendations, Cav. 10 days seems to be enough information. When the workspaces are built by John Novak, he puts them in 10 days. There's so much information in the markets. They're moving so much. It used to be 30 back in a slower market time. But 10 seems to make it work the way it needs to. But remember, if our settings are different, our charts are going to be different. Who told you to put it at 5? Then I would stick with 5. I'll move mine to 5. I don't care. Mine are teaching. Guys, I'm teaching lessons. I don't trade my NinjaTrader 7 charts, but I'm 10 days on my 8 too. But my computer can handle it. I think 5 days, if you were having a problem with crashing too much information, that may have had something to do with it. Trade your charts, guys. If you need me to go to 5 so that we're consistent, I'm happy to. It doesn't bother me one bit. I'll change them. I'll change mine to 5 right now. Cool. Looks almost the same. Does that look more like yours, DJ? So that's 5 days on crude oil. I don't know how different it is. But I think this is great, guys. I always ask those questions. All right, that's your 5-1, DJ. So do me a favor. Right click on your 5-1 and go to templates. Actually, before you do that, right click on either chart and reload all historical data. I don't know what that means, Gary. I don't have HVA charts. I don't have market flow charts for this classroom. So DJ, try to reload the template and see if that helps. And if not, jump over to Jason real quick. He'll be able to look at it and have you fixed in a matter of seconds. Awesome. Let me know how it works out. I'm going to jump into strong triggers, guys. Rule number 1 says that I have to have strong triggers. All of my triggers should be the same color as my background. Small triggers, solid lines. Large triggers, dashed lines. Backgrounds, green, guys. They're all the same, so now I can have strong triggers. But what strong triggers means is that my small triggers have broken above and away from my large triggers. It's the space created between the two. I want you to think about scissors, open, ready to cut. The space between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is something that you're going to hear in class all day long, guys. Odds favorable momentum. It's the best of the best look. And when you have odds favorable momentum, when you have strong trigger lines, this is the best look for buying pullbacks on Fibonacci support on that smaller, faster chart, Or in a downtrend, when the small are below the large, everything is wide angled in the direction of the trend, the space is between the two. This is the best look for selling Fibonacci resistance on that smaller, faster chart. You're going to see these tails on the large chart. They're the wicks, as some people call them. Um, we're not going to trade these tails or wicks because our entries come from a smaller chart. But these tails represent a pullback on that smaller chart. You're going to be able to pinpoint exactly where that tail is most likely to form, and that becomes your entry for the highest probability trend trade. And guys, odds favorable momentum. Rule number one is really that simple. Everything is wide, separation between the two. The odds are favorable for the market to continue up. The odds are favorable for the market to continue down. These tails represent potential entries. The opposite of strong is weak. When the small triggers work their way inside of the large triggers, we call this a weakening of the large triggers, guys. And a weakening of the large triggers simply means that anything can happen up or down. We give away the advantage of momentum, and it becomes a crapshoot. It's like the scissors closed. You can't cut with closed scissors. You can take a stab at things, but it's not the same. Odds favorable, anything can happen. And guys, if you let momentum lead the way, what you're going to find is that momentum breaks areas. Momentum covers mistakes. Momentum gives you that extra push to manage those less than ideal trades. And odds favorable momentum doesn't happen all day. This is my favorite rule number one picture. And this reminds you that 90% of your day is spent as a chart reader, guys. And if you just start at the left and work to the right, odds favorable, that separation, the triggers come back in and create that anything can happen scenario, those weakened triggers, and it precedes a reversal, even without the benefit of Fibonacci here. The reversal gives you odds favorable momentum, and there's one of those tails. That's where you guys are getting long with all of that momentum, taking it up until there's anything can happen triggers again, and another reversal creates odds favorable. There's your tail, down it goes. This is something that repeats itself every market, every time frame. These patterns don't know what market they are. It happens all the time, every market. And then you get the indecision, guys. Then you get the transition. Then you get the people that move the market fighting for supremacy. Maybe your trigger lines don't match one another. You can't have rule number one met. If your trigger lines don't match the background, you can't have rule number one met. And if rule number one isn't met, your best option is typically to sit on your hands. This transition period where nothing agrees, this is where a lot of people that don't have the advantage of Nexgen, this is where a lot of people that don't have these solid proven rules are tempted to predict what the market's going to do. They're tempted to say, well, the background is green and I'm going to go long. Or my small triggers are red, I'm going to go short. And they get run over 5 or 6 times. They get dejected, angry, kick the dog, get a divorce, crash their car into a tree. And it all could have been avoided by just committing to rule number one, because eventually somebody's going to win and they're going to give you that momentum. So rule number one, guys, the advantage of momentum. If I open up that crude oil chart and I take everything off of it, except those triggers, I want you to see how easy it is to recognize. I'm going to go 2 triggers only. And let's arg. I think my 2 triggers only are not working. Let's see if that works. I'll take them all off. There we go. Guys, odds favorable. The market continues up. There's your tail. There's your opportunity. Odds favorable. There's your tail. Represents your opportunity. Notice that the large triggers are green and flat. The background is red. The small triggers are green. Hey, Brian, welcome to the room. So guys, give me a Y or an N. Do I have odds favorable momentum on crude oil right now? Do I have the strongest trigger look? Is this a market that's likely to continue? No, absolutely not. Is it okay to sit on your hands and do nothing and wait for the best of the best? And the answer is absolutely it is. because we're all about advantages, guys. We're all about making sure that we have the advantage of momentum. And then once we do, let's make sure that we're not hitting one of those areas that are likely to stop the market. And if I go back to crude oil, to the live market again, I want you to see this. Price reached Fibonacci support, and that's exactly where it bounced. Price reached the mid-band and the large triggers don't follow, and that's where it bounces. And look where everything came from, down here at support, all the way to resistance, and then from resistance, all the way to support, from a divergence low to push it up. Guys, you know exactly where the market is likely to stop. You know exactly where it can terminate, where it can reverse, where it can create an untradeable bounce, and you know it because of termination conditions. That's rule number 2. Making sure that none are present. And termination conditions are Fibonacci-based indicators that may reverse the market. And it's a comparison of that area and the T3 trigger lines. So I'm going to show you the areas. And this is for those of you that are brand new. Kareem, Mike Lynch, who else is in here that's brand new today, guys? It's great to have you, by the way. This is kind of a roadmap for what you're looking at on your chart. These are the areas that may stop the market, that may create an untradeable bounce. These are the areas where decisions are made, where the people that control the market are deciding whether they want to enter, whether they want to exit, or whether they want to smash through it to the next key area. The areas that we're looking for, divergence highs and lows, this magenta and cyan line, these print from pivots, guys. Price creates these. All it is a loss of momentum. Divergence in this classroom means a loss of momentum. It means that price made it all the way down to here, and then the buyers stole the momentum from the sellers, and we can see it through that divergence low line. The buyers pushed it all the way up to here, and when the sellers stole the momentum, the magenta line prints, guys. These are areas that can reverse the market. They become like lines in the sand. Brian, good looking test, brother. Now I just want you to post another 800 pictures over the next month. Beautiful. Nice job. Welcome to the room. It's great to have you. So guys, when we're talking about these termination conditions, we're also looking for red Fibonacci resistance and blue Fibonacci support, yellow 1-to-1s, and sometimes even a mid-band on that large chart. But the large chart leads the way. And the large chart's going to let us know if we have a termination condition. If we do, if we've reached an area that may stop the market, we no longer have a clear path. Rule number 2 isn't met. If we have not, well, then the path is clear, and let's look for those opportunities. But let's go back and let's define a little bit. How do I know if I've reached a termination condition? It's a 2-part process. The first part is that price reaches the area. And guys, this is simply because if these areas are where decisions are made, price reaching the area sets off the decision-making process. When those dynamic Renko bars come down and reach Fibonacci support, prices reach the areas. This is where decisions may be made. All you have to do is ask yourself, where are my trigger lines? Where are those same T3 trigger lines that gave me the advantage of momentum? If they remain above support, support is a termination condition. You do not have a clear path. Sit on your hands and do nothing. Wait for the reaction. Don't try to predict the reaction. And it really is pretty simple, guys. If price reaches the area, the triggers don't break, no clear path. How do I have a clear path? Because, guys, there's areas everywhere on your chart. When both the small and the large triggers break through an area, so in this case support, when the small and the large get to the other side of support, it behaves as resistance. The area is now broken. Since we haven't reached the next fib, the path is now clear. And if you piece it all together, odds favorable momentum, that's our first rule. Clear path, there's our second rule. Guys, there's one of those tails. There's one of those potential entries for you guys, taking you all the way down to the next area. Termination conditions happen all day, guys. You've got to be okay with it. The buyers take the momentum from the sellers. It creates this divergence line, this cyan low line. It is not a termination condition because price creates it, price doesn't reach it. But when price comes back and reaches this divergence low, all of the trigger lines remain above. This is an area that may stop the market. This is an area that may create a bounce. So you don't know in the moment, so you say to yourself, no more short trades. This particular look, when price trades below the divergence line and back above it, this is what we call a pivot stop out of a prior divergence condition. And these are very powerful. These can be market movers. These can reverse the market. They become even more powerful when they line up with Fibonacci resistance. And guys, 90% of your day is reading indicators. This picture is one of those great examples of that. And I like to draw a lot of pictures. So if you're new to the classroom, brace yourself. Price reaches Fibonacci resistance. The brilliant Nexgen users say, well, all of my triggers are below resistance. That's a termination condition. I'm not going long into this line. And look at the reaction, guys. Right off of resistance, the buyers give it a giant shove all the way to support. And when they do, once again, you guys say to yourself, well, none of my triggers are through support. I'm just going to wait. I'm going to be patient. It's okay. It costs me nothing to be flat. Let's see what the reaction is off of Fibonacci. And sure enough, it goes all the way up to resistance. No triggers. That's a termination. It also reaches that divergence high line. No triggers, there's 2. And then a second resistance, there's 3. I have a pivot stop out that coincides with resistance, guys. And this is the one most likely to move that market. And sure enough, it gives me odds favorable momentum, smalls below the large. It gives me a clear path because this bar hasn't reached this Fibonacci support. And guys, this right here, this tail, this potential entry, that's the highest probability trend trade that we teach. That's what we're talking about right now. That trend trade that happens after a termination condition, guys. This termination condition, when it reverses the market and sets up your trade, that's a strong top. A termination that creates a full reversal is a strong top. What you do in that 90% is going to dictate how much of that 10% you get to keep in your account. If you keep chasing trades without rules met, you'll be lucky to break even. So price reaches Fibonacci support. None of the triggers break. Look at how it called it. Guys, you knew not to go short into that area. And sure enough, you know not to go short into it a second time. And you knew that area was there. You knew that was a big red flag. Price reached Fibonacci resistance. Absolutely none of the trigger lines break through. Are you guys seeing it? Can you give me a why if you're okay with the recipe? Because it really is that simple. If price reaches Fibonacci resistance and none of the triggers break, guys, it's a termination. You know about these areas. How freaking amazing is that? Price reached resistance, none of the triggers broke. Guys, this is what set it off. This is what took that market all the way down to yellow 1-to-1s. The triggers can't get through, and that sets you up for the reversal. I can't stress how imperative it is to not have those termination conditions in the way. I can't stress enough how many losers it's going to keep you out of. I accidentally closed out my tops and bottoms section. One of the most common broken rules for new users is trading into areas that may reverse the market, guys. And you have a simple recipe. If price reaches and nothing breaks, no triggers get through, sit on your hands and do nothing. And here's another great example. And I want you to think about it in terms of you not being in control. The sellers take over and they push. And they create odds favorable momentum and they push. And when they reach Fibonacci support, look at that momentum. The sellers say, to hell with that support, I'm going to the next level. And all of that momentum carries them to these yellow 1-to-1s. Notice that the small triggers are starting to return. When those 1-to-1s are reached, there's nothing to do. The triggers remain above. And I think this is probably one of the most amazing things because you're going to see this often. And you really will start to just be like, gosh, these things are unbelievable. The buyers fight. Decisions were made. The buyers tried to take over right there. Maybe the sellers took some profits. But a lot of sellers weren't done and they pushed back. But the buyers really wanted it to go up. but the sellers weren't having it, and the buyers wanted it, and the sellers said no. And guys, notice that price is dissecting that key Fibonacci area. This is where decisions are being made. I don't have strong triggers. I don't have a clear path. And this really is the best example of that 90%. 90% of your day is spent reading indicators. 90% of your day is spent waiting for advantages. And I want you to see what happens from here. The market reverses. Everything goes green. All my triggers are green. My background is green. My smalls are, in fact, outside of the large. And both small and large triggers are above resistance. It's behaving as support. And there's one of those tails, guys. This is where, when we talk about entries, you will be able to pinpoint exactly where that tail is most likely to happen. This becomes your entry for the highest probability trend trade that you can take, the one that happens after a termination. And that's the one that typically makes it. That's your 70 to 80%, guys. This is your foundation. This is the best of the best. But it's what you do in that 90% that's really going to dictate the success that you have when you're catching the 10. Is everybody good with that? Pretty simple. Price reaches, no triggers, no trade. Whoops. And DJ, how are your charts, brother? While I'm thinking about it. And guys, I have pictures for everything. So for the brand new user, this is it. No triggers through, it's not broken, no clear path, sit on your hands, do nothing. If the small and the large break through the area is now broken, the path is clear. Can you guys give me a why, especially my new users? I know that if you're brand new, it's like drinking from a fire hose, right? There's a lot of information coming after you. This is the most simple way to get it done, guys. No triggers, no trade, both triggers, giddy up, let's go. Look at that, odds favorable, there's a tail when it breaks. You guys are going to the races. Sometimes all that momentum can break an area. And I'm going to share this picture with you guys. It's the same one as the last. No triggers, no trade. Both triggers go. But odds favorable momentum, guys. Odds favorable. The best of the best, strongest trigger look can break areas. Momentum breaks things. I'm going to put it on a coffee cup. When your small triggers absolutely smash through an area, you have odds favorable momentum. This is an area with the potential to break. Because of the momentum pushing the market in the direction of the trend, this area has the potential to break. But the large triggers aren't through. The area is not broken. It is not a clear path. So rule number 2 isn't met. This is going to be your first medium probability trade. And a medium probability trade means that most indicators agree for the trade, but a problem exists. And that problem is that you don't have a clear path, which means that it's imperative that the momentum doesn't go away. It is unbelievably important that the entry area is as good as it can be. And we're going to talk about the entry for that one. But this will be your second trade, guys, that medium probability, those areas with the potential to break, because they do break all the time. Are there any questions about using an area for a termination? Remember, the large chart leads the way. If it reaches an area, no triggers break, no clear path. There's one more termination condition that I do want to talk about, guys, and this happens on a smaller, faster chart. And this termination condition doesn't use lines. It uses divergence. It uses that loss of momentum. The loss of momentum is illustrated through the cyan lines from a low, through a magenta line from a high. But we're not reaching these lines to recognize a termination condition. We're waiting for three. Three divergences in the same price range may terminate the trend. Three losses of momentum in the same price range may terminate the trend. It becomes more powerful when the small triggers work their way inside of the large triggers. When you have those anything can happen triggers. And you'll see it from a low, you'll see it from a high, and it becomes even more powerful if that final pivot, that third pivot, is higher than the previous from a low or lower than the previous from a high. Some of you guys may recognize a little head and shoulders pattern there. So visually, there's three losses of momentum. Visually, there's weak triggers. Visually, price couldn't even reach the previous pivot. Guys, these can turn the market. And you'll see this at a low or this at a high. at times like this, when the market appears to be turning from nowhere on that bigger, faster chart or slower chart. Even with odds favorable momentum and a clear path, three divergences can push it down. Even with that clear path and everything railing to the downside, three divergences can push it up. So you're going to use this look to give you the information that it's not okay to take that next trend trade, that things may be changing, and you're seeing that change on the smaller, faster chart first. You'll also use this when managing trades. If you take the perfect trade right where that tail was formed, right at an area inside of favorable large triggers, and everything says down, but three divergences print, you now have the heads up to say, hey, I'm going to manage out of this trade. I'm going to take profits on this trade rather than hope, because it's giving me an indication that it may be pushing higher. Guys, this becomes a little bit of a safeguard. And as you begin to take medium probability trades, as you begin to venture outside of the high probability trend trade, you will use this for management. And that's termination conditions. So we've used up the large chart, guys. Large chart, define direction. Green means up, red means down. Large chart, define momentum. You either have strong triggers or you don't. You either have the advantage of momentum through rule number one, or you have anything can happen. Gee whiz, I sure hope it goes my direction triggers, right? One of them feels pretty good for risking your money. And then finally, you've defined your areas. You know whether or not you've reached an area likely to stop the market. This picture is outstanding. You'll notice that the uptrend is in play. The smalls are above the large. That's beautiful. I haven't reached Fibonacci resistance. Rule number two is met. This is what your chart's going to look like, guys, in the event that it's time to look for a trade. And that's when you're going to turn your attention to the smaller, faster chart, to the refinement chart. And this is going to take that one bar that gives you all that great information, and it's going to refine it down to 15 to 30 bars. And this is where you're going to pinpoint exactly where the market is likely to continue. This is where you are going to take that broad stroke of a brush, that overall look of the market, and we're going to pinpoint. We're going to use rule number three to buy or sell an area inside of favorable large triggers. That's rule number three. We're going to use a limit order to buy or sell at an area inside of favorable large triggers. And a limit order means that you're literally going to wait for the market to come back to you. When the large crowd is pushing up, when the large crowd has a clear path, you're going to let the small crowd get you back right to that perfect entry, right to that point where these tails are most likely to form at an area inside of favorable large triggers. So let's define favorable large triggers first. These create an amazing advantage for the new user because when your large triggers and your synthetic triggers are one on top of the other, when your large triggers, the smooth and the synthetic, the stepped, are one on top of the other, overlapping wide in the direction of the trend, guys, you're going to have the smallest window of opportunity. You're going to have that tiniest point where the market is likely to continue. The further apart these triggers are, the larger your risk becomes. So for the brand new user, it makes sense to keep it as focused as possible on the best of the best. Favorable large triggers will do that. But we need the small crowd to do their thing. So I'm going to go to the rules for entry, and we're going to go through the refinement process together for a long and a short. So this is your small chart when the large chart says go. Large chart strong, large chart has the trend, large chart has nothing in the way. You're making the decision it's time to look for an entry. You're identifying your favorable large triggers. You're looking for the areas that will fall within them, fibs, mid-bands, yellow one-to-ones, but you're waiting for that small crowd to do their thing. You're waiting for those yahoos to fight everything the large crowd is doing. And that begins with a reversal bar, a down bar, and a sea of up. And when this down bar prints, you're going to create your window of opportunity for a long trade. The window of opportunity extends from the highest point of support, fibs, mid-bands, yellow one-to-ones, to the lowest point of support, furthest away from price, fibs, mid-bands, yellow one-to-ones. The key is that they need to be inside of favorable large triggers because these are moving averages and price corrects itself. And when we give it an area inside, it has a place to bounce. Your job will be to activate a limit order at that highest point of support inside of favorable large triggers. And we're going to go through the whole process one more time. And we're going to look for the best entry. And it starts with the large chart has odds favorable momentum to the upside. The large chart has absolutely nothing in the way to the upside, which means it is screaming down the highway. You will wait for a reversal bar on the smaller, faster chart. And guys, rule number 3 is where you develop your patience. When the reversal bar prints, I want you to look for your favorable large triggers. I want you to define the highest line of the triggers to the lowest line of the triggers. Remember, if they're spread out, that area gets even bigger. This is not where the market is likely to continue. The market is most likely to continue from the highest point of support to the lowest point of support inside of favorable large triggers. Do you guys see how that was refined a little bit? How we're able to reduce the area where it's likely to continue because we're using these areas. These are like a bounce point. It's like a tennis ball up against a brick wall. You're going to activate a limit order at the top of that window, a tick or two above the highest point of support, and you're powerless. There's nothing else you can do. You've done everything that you can do in this scenario. And if the market comes back and hits it, you're long. You're in a long trade, but here's the cool thing, is you're in a long trade with the advantage of momentum. You're in a long trade with the advantage of a clear path. You're in a long trade having entered where the market is most likely to continue. And guys, you have the confidence of knowing that you're in a trade that typically wins 70 to 80% of the time. Good morning, Jose. We created a window. So if the market pushes lower to that lower spot, it's cool, guys. We're still where the market is likely to continue. You will see red numbers against you when you enter a trade. Almost 99.9% of the time, it's going to fluctuate past your entry. But we're at that entry because the large chart was screaming to the upside, because the large chart had absolutely nothing in the way. And then here's the coolest thing about what we do, guys, is your rules allow you to manage risk before you ever manage profit. Your rules allow you to understand where the market shouldn't go. And this is where your protective stop goes, guys. And if for some reason that market pushes beyond that lowest point of support, 4 or 5 ticks outside of the window of opportunity, it's going to hit your protective stop. And you're going to take a loser. And I will never tell you that you're going to take 100% winners. Guys, my win percentage is typically around 60, 65. But on this high probability trend trade, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's a cost of doing business. That's all it is. Because we're not trading something that guarantees us a win every time. We're trading something that gives us a statistical advantage, a pattern that is researchable, that is back testable, that can be proved, that can be embraced, and that can be learned. This is your high probability trend trade, guys. I want you to spend 20 days getting in at the right spot. 20 days making sure that you are in where the market is most likely to continue. Because when you learn to trust this, you're going to realize that 70 to 80% of the time, this is your result. A market moving on to that next key Fibonacci area. And once it moves in the direction of your trade, you can reduce your risk just below that reversal bar. Manage your risk even more. And then from my spreadsheet, I have the exact same sequence right here in the top left corner for those of you that stole my spreadsheet. And it starts with the large chart being met. And so we're going to go the other direction so you guys can see it both directions. Step 1, make sure that the large chart says go. Make sure that the large chart says odds favorable and cleared path. You're going to wait for the reversal bar on the smaller, faster chart. And at the time of the reversal bar, you're going to identify the highest line of your triggers to the lowest line of your triggers. And it's going to be within this area that you look for your areas, fibs, midbands, yellow 1-to-1s. When you identify your window of opportunity, You're going to know exactly where the market is likely to continue. Notice red Fibonacci, magenta, yellow 1-to-1s, from the closest resistance to the furthest resistance inside of favorable large triggers. And you're going to activate a limit order, a tick or two below that lowest point of resistance, guys. This is your entry. This is your first 20 days. And if the market comes back, you're in a short trade with odds favorable, momentum, no terminations, and having entered where the market is most likely to continue. So this is your focus for 20 days, guys. This is your best of the best. And we talked about using those tails, right? Talked about using those tails on the larger chart. Let's see if we can find one with odds favorable momentum. It's weird after a holiday. It really is. Let's see if this one's going to work. I'm going to show you how to study this look. And it's taking its time and not responding, guys. We're going to use tails on the larger chart. We're going to scroll back on the larger chart. You're going to do this because you're going to prove me wrong. You are going to be angry and shake your fist and say, Mark, this has got to be absolute crap. And I'm going to prove to you that that's true. And I want you to scroll back on your larger chart. And when you have odds favorable momentum and you have a clear path, I want you to circle those tails that you see. And if you circle those tails and they line up with an area inside of favorable large triggers, congratulations, you have the highest probability trend trade. This is a great study tool to create recognition. I'm not trading the tail, I'm trading the area inside of favorable large triggers. And guys, this is a pattern that repeats itself over and over and over. And all you have to do is study it and learn it. All you have to do is practice it. Well, my two triggers didn't work. With the holiday, it's a little difficult, but let's see what these look like. Odds favorable. Everything says up. That's 1509. I'm going to take this look and I'm going to scroll back on my smaller, faster chart, and we'll see what it looked like. My goodness. And there it is, right back to support, right inside of favorable large triggers. Took two shots to do it, but it does happen. But you can go back and you can study this and you can see what it looks like each and every day. You can take those pictures, you can post them in the room. Price reached, divergence low. My triggers haven't broken through yet. This area has the potential to break, but not quite. We're still waiting for the small triggers to get to the other side. Let's put on all the fibs and see what happens. Guys, are there any questions? See how even with odds favorable, my large are above the area. The area has not broken, but it does have the potential. That's your medium probability trade. It did pull back to resistance inside of favorable large triggers, but I'm giving up momentum here. And that becomes problematic. So, any questions? Can you guys still hear me about the high probability trend trade? I'm telling you right now, guys, if you give yourself a couple weeks, just focus on it. Just focus on getting in at the right spot. Great entries create manageable trades. It's the most true statement I think that you'll ever hear trading with Nexgen. When you learn to get in where the market is most likely to continue, it gives you the best advantage. And it's this super simple, high probability trend trade. Day one, you're going to be like, what the heck? Day two, you'll be like, oh, wait a minute. By the end of day 3 or 4, guys, you're going to start to see this. Don't put the pressure on yourself to be great at something on your first day. Just understand the path to getting to where you want to be. This is a checklist designed to get you in at the right spot. It doesn't have anything to do with management. This is 100% designed. If you mark yes on each and every one of these, I've never had anybody do worse than 70%. Ever. So if you really are here to make money, doesn't it make sense to give yourself this advantage, to create a little confidence through the memory of success, to lay down that great foundation? Guys, if you're following this checklist, it gives you a statistical advantage. Here's the exact same checklist, but it's going to have pictures liberated from resource material. Thank you for that, Gary. Guys, there's news in 1 minute, medium impact. Is the market coming from a good top or bottom? Is the market coming from an area that reversed? If it isn't, you can still take the trade, but you're going to want to use those divergences that we talked about on the smaller, faster chart. Do you have odds favorable momentum? There's your look. Scissors, open, strong. Everything is the same color. And there is the look of the opposite, guys. Drill these into your brain so that you can recognize them at a moment's notice. Here's your recipe for termination conditions to make sure you have a clear path. And then here it is, both long and short, identifying the window of opportunity. So this is your second checklist. This one, you should study it for a minute each and every day before you get the day going. The other one, you should have printed out on your desktop with your favorite crayon and make sure that you're marking yes to each and every one. And then I'm going to give you a plan. If you trade without a plan, you are subject to emotion. If you trade without a plan, you are subject to your fears, to your opinions, to your wishes, wants. My father-in-law used to say, wish in one hand, shit in the other. Tell me which one fills up first. Pardon my French, but I'm telling you it's true, especially with trading, guys. Um, isn't that how it is sometimes, Chef? They will jockey for position right before news. You'll see that a lot. You'll see them scramble to these key areas right before news. So guys, this plan that I'm giving you right now is designed to optimize your success with the high probability trend trade and that 50-50 trade, that area with the potential to break. This is only a stepping stone. This does not have to be the end of the road for you. This can be the end of the road for you if you choose to allow it to be. I can tell you right now, and there's people in this room that have had great success with this plan, never felt compelled to go outside of it until they mastered it, until they were funded with it, until they were trading it daily with success, and then they began to incorporate small changes. Your simulation, study, class feedback, continuous practice, you're going to create a plan that works for you. You're going to create a plan that embraces your pain tolerances. You're going to create a plan that uses your ability to identify advantages, and it's going to be your plan. And it's all going to be based on you being a chart reader. So while you're developing the ability to become a chart reader, this is a simple plan for consistency. And it starts with never fighting the large chart direction or the triggers ever. Just don't do it. This will pull 60%, 70% of the typical new user losers right out of the equation. Define your entry, guys. 20 days, get in at the right spot. Great trades, great entries, create manageable trades. And then the second part of this plan is managing your great entry, guys. And taking a mechanical approach, a pragmatic approach, a methodical approach. The same way you did with your entries, this tends to be the most straightforward approach for new users. And it starts with getting in at the right area. It starts with getting in where the market is most likely to continue. And your entire management plan is dependent on your great entries. So study entries. Your initial stop goes where the market shouldn't go. And at this point in your trade, there is nothing for you to do. You're either going to get stopped out, right? That's a normal part of a positive equity curve. I will never blow smoke and tell you that you're going to win 100% of your trades. Or it's going to bless you with a reversal bar in the direction of your trade, at which point you will reduce your risk 2 ticks above that reversal bar. Or if it's a long trade, 2 ticks below that reversal bar. And once again, you find yourself with absolutely nothing to do. This is where fear is going to kick in. This is where you're going to want to move stops, where you're going to want to adjust your targets. Just let it happen, guys. Play on simulator. Be okay with losing monopoly money, or you're never going to be okay with losing real money. Nothing for you to do. It's either a small loss or your target gets hit. And your first target is lame. It's boring. It's only $100. But there's not one of you in this room that would be upset if I walked up to you on the street and handed you a $100 bill. Remember that when you're trading, guys. We're not home run hitters. You guys ever seen Moneyball? quick digression. Maybe this will get you guys talking a little bit. Has anyone seen Moneyball with Brad Pitt? Great movie. Where the A's built an entire plan around getting on base. Not home runs, not MVPs, nothing more than getting on base, guys, because base hits eventually make it home. That's what this is. This is your first base hit. It's $100. And when you make that $100, you feel good. You feel confident because you've just had success, your palms dry up, your stomach stops flipping, you quit adjusting your charts, and you're going to move your stop to break even, which means not only did you get paid, but you have nothing to risk. And guys, this is going to make it easier for you to believe that the large chart leads the way. This is going to make it easier for you to accept the fact that the large chart had odds favorable momentum, that the large chart had absolutely nothing in the way, and you're going to hold on for dear life for that second target. And you're either going to get stopped out break even, which is cool, it doesn't sting, not in the least bit, or you're going to make that second target, guys. And if you do, it's only $200 off in the distance, which means that you just made $300 on the highest probability trend trade. You've just gotten a little more confident through the memory of success. You've given yourself every advantage. You're out of the market with profits, so you feel wonderful, probably calling your best friends going, holy shit, you need Nexgen. And you're waiting for the next setup. And guys, this is your first 30 days with Nexgen. Give yourself every advantage. And when that great trade sets up, take a picture, annotate your chart, get it into your personal trade setup look. Let me drop that KISS plan in the room. There's your KISS plan. Embrace it, guys. And then for those of you that are that next level, you guys that are looking for the next trade, here's the template to get you outside of the KISS plan. All we're doing is the same thing. We're defining entries and creating checklists because the idea is that we should be able to repeat the process over and over. We should never deviate from our plan because our plan creates a statistical advantage. You should be able to find 10 pictures of your perfect long, 10 pictures of your perfect short, and you should be able to determine that they do in fact win more than they lose and provide you a statistical advantage. There's your template for creating your own plan outside of something, outside of the one that I've given you. But guys, this one is a great stepping stone on your way. Fill out that spreadsheet, take a lot of pictures, get them in the room, use a checklist. Guys, look at that. That's a textbook termination condition. Absolutely no triggers went through this divergence low. There was no reason on God's green earth to go short and lose that trade. Price reach resistance. I didn't have strong triggers or a clear path. And there's absolutely no reason to try and get in at an area inside of large triggers. Does that make sense to everybody? I'm not trying to shackle you to a trade that takes a while to set up. What I'm trying to do is make you a chart reader to get you to the point to where you can understand statistical advantages, that you can take trades that typically win more than they lose. That's it. That's the first hour, guys. We have learned the trigger line and Fibonacci rules for when it's okay to trade. It's up to you to simulate. It's up to you to study. It's up to you to post it in the room and ask a million questions. I can't make you do that. And I'm going to tell you right now, I can't see your faces. If you're confused, I need you to put on your big boy, big girl pants and post it in the room and say, Mark, I need a little clarification with this because I'm serious about wanting to learn this. I'm not going to be a wallflower and hope for the best. We're simplified. We're focused on the best of the best. Let's start snapping pictures, guys. I've got over 7,000 pictures in my Snagit. If you need help taking pictures, let me know. I'm glad to help. And this is it, guys. That's our first hour. I'm going to leave you with crude oil that's coming from a termination. Textbook termination. Created a full reversal. But three divergences in the same location said, hey, we may push a little lower. Notice that the triggers are split. All of those first hour lessons are coming into play really in one single moment, which I love it when that happens. I'm going to go stretch my legs. I'm going to take 5 minutes. If you have a question, post it in the room. If you have a chart, guys, the second hour is about what you're doing. And when the market's not doing a lot after a holiday, and there's nothing to do, my job becomes difficult. So I need you to ask a lot of questions. I need you to post a lot of pictures. I need you to just, I don't know, try to stump me. Ask a question. Go, hey, I'm gonna confuse Mark. It'll be fun because we'll just go look for the answer together if I don't have it. I'll be back in about 5 minutes. They need tech support bad. What's wrong, Michael? What are your charts doing? What aren't they doing? Guys, I want you to be comfortable. I want you to always ask. No indicators at all? Is it just a big gray screen? Kind of looks like that with nothing but price bars. So try this. Right click and go to data series. You're probably 10 days back on days to load. I want you to do me a favor. I want you to change it to a 9 and apply it or click OK. And see if that brings you back. Sometimes there is like a tick of damage in that data. And that's one of the easiest fixes ever is either go up or down a day. And very often you'll find that it gets you that fix that you need. Don't ever hesitate to ask in this room. I'm telling you guys, I have broken everything. I'll be back in 5 minutes, guys. When I get back, did it work? Who needs Jason? Just kidding. I totally need Jason. I'll be back in 5, guys. If you have a question, drop it in the room. Hour, guys. Is it just me or is the large chart leading the way? And the small chart said be patient. I hope you're seeing that right now. The large chart said odds favorable. The large chart said we're going up. The small chart said, hey, calm it for a second. I might push a little bit lower. And sure enough, it did. Pretty cool how you have the advantage of seeing that and understanding that. Guys, this is the second hour. So what I'm going to do in the second hour is if anybody posted a picture, and unfortunately, I think I've only got one or two, I'm going to take a look at it, and we're going to talk about it. And we're going to talk about it not in terms of right and wrong. We're not going to talk about it in terms of good or bad. We're going to talk about in terms of advantages. What was there? Was there something going on that said that market was likely to do what you anticipated it to do? And guys, it's easier for me to read if you tell me why you did what you did. Hey, good morning, Dwight. Nice to see you. Tell me why you did what you did. If you're not comfortable with the rules yet, tell me what you saw. Um, if you don't have a plan in front of you, tell me what inspired you to do what you did. I can read charts, guys. I understand when there's momentum. I understand when there's no termination conditions. But what you're doing through annotation is you're reminding yourself, this is my look. This is my best look. This is what it looks like to get me into the market. And you're creating this database of what your perfect long looks like, right? And you're creating this database of what your perfect short looks like. And the more pictures you take and the better job you do annotating them, the easier it'll become for you to take a trade. The easier it'll become for you to recognize it when the market's moving, when those things are moving fast, right? And you're going to feel that way. Ah, the market's moving so fast, I just can't keep up with it. The market's moving, and I just can't keep up with the market. And the more pictures you take, the easier it becomes. So I'm going to go scroll on the first one. Let's see what it is. John Novak started us off this morning. It's pretty cool when he comes in with a lesson. And he's just talking about when there's nothing to do, because sometimes there's nothing to do. Um, the triggers are all above the areas, so shorts are limited if you find one. None of the triggers are past the termination condition. Longs are problematic. And this is a great chart read, just saying I don't have an advantage one way or the other. I'm going to sit on my hands and do nothing. Um, and I think one of the things that's pretty outstanding is John Novak taught a live class one day where they followed the S&P. He invited everyone in, and he said, "Let's trade." And 2 hours went by, and I think he took one trade um, because when there's not a statistical advantage, it's better to sit on your hands and do nothing. All right, Gary, let's see what you have here. This is the NASDAQ. Price reached support. Absolutely no trigger lines broke through. Therefore, you didn't take a short. Termination with divergence, always a good look. And then market flow with HVA, but everything says down. Do you guys remember the first thing that we said? Do not fight strong triggers, right? Large short leads the way. No matter how great the termination condition, with this much momentum going into the area, it's more than likely to bounce. Maybe a retest, just the same way it did up here. All that momentum into this termination condition, it just retested a couple times. Gary, great picture of termination conditions. And no trade yet. That HVA is not your money shot. That is super risky, fighting everything on every chart, right? Pretty cool. And then who posted our next picture? Not a lot of pictures today. GWC. Termination creates a full reversal. Full reversal gives odds favorable momentum. Odds favorable momentum has you going into a potential termination. There's that 50-50, right? On the high end. Termination conditions, all charts strong, triggers, all charts green. You take a pullback to support inside of favorable large triggers and get paid. Momentum for the win, right? And then GWC, did you recognize that this area has not broken, but it did have the potential to break? And I just think it's important because when you know what you're up against, it becomes easier to manage. It's a great trade. Didn't have to be a home run, did it? You were in at 30, out at 43. That's a $260 trade using that momentum, the area inside of favorable large triggers. Outstanding. Outstanding trade. And then JW, let's see what you did. You believed in the momentum. And I think that when you know what you're up against, then you're good. All right, JW, help me out. Where did you enter? Why did you enter? What made you do what you did? Can I show you why I say it? And I'm not picking on you. I hope you realize that. I love this look. Whoops, wrong one. You've got momentum, right? You've got the potential to break. You've got all these things going in your favor. But I can't see where you got in. And I see that you had to ride out all of this to get here. Is this a trade that is giving advantages, right? And if we go back to crude oil and look at it, you got in right about here, right? Perfect entry, JW? Because it looks like you got in on the first stab. So I'm assuming that was your entry somewhere right in here. Large chart always led the way. Awesome. 1, 2, 3, 4 divergences. Did you just keep your stop in place because of the large chart? Which I don't disagree with. There's some next level goodness in there. Large chart set up. Large chart said you were coming from a termination. Large chart said, you know what? Everything says the market's likely to continue up. That's an awful lot to sit through. That's a lot to sit through to take the move. I just want to show you, if you took the first best entry at 30, you could have made your $300 at 50, right? At 30, you could have made 100, maybe break even, take it again, make 100. I think it's a great trade. I think you let the large chart lead the way. I think it's beautiful. I think it would give me heartburn to no extent to sit through all of that. But if you'll do me a favor when you snap a picture, if you'll show me on both charts where you get in, write some stuff on it. Tell me, right? Use that call out button. Best momentum ever. Be excited about it. And what happens is it becomes repeatable. I love your trade. I think your hold was outstanding. At that point, though, I probably would have just held for the next fib. You sat through all the pain, and then it was on its way. But if you write it down on the chart, this is why I did what I did. What it does, JW, is it gives you the opportunity to repeat it, especially if it's outstanding. It gives you the opportunity to take that trade over and over, to know exactly what you were looking for, to know exactly why you did what you did. And then it isn't hope, it's just trading that plan, right? Gary, there is no channel There is no channel, Gary. That's your trigger word. I hope that helped a little bit, JW. Gary, you had a termination that created a full reversal that gave you odds favorable momentum, that gave you no divergence on a pullback to an area of resistance inside of favorable large triggers, but you didn't have a clear path, right? You had one, two areas that were not broken. You had strong triggers up, strong triggers up. How come you're not using synthetics anymore? Just curious. Right? You don't have any synthetics here. Is that intentional? If it is, totally cool. I don't think your template's right over here. I think you're using a 13.2 template that is designed for a large chart, not a small chart. So Gary, right click on your 13.2 NASDAQ and go to templates, load, and I want you to go all the way down to where it says NASDAQ 13.2. It's going to create a completely different look that's going to make it so much easier for you to trade. Let me cancel that out. And while I click on Cab's picture, I'm going to open up my NinjaTrader 7 NASDAQ. And we're going to find that same timestamp and take a look at it. And let's see what the trade looked like with them. Correct. There we go. You got it. So you're 34. This was it right here. Isn't that beautiful? No divergence, pull back to resistance inside of favorable. That's your 50-50, 100%, Gary, and it takes you down. Big difference, right? Huge difference. I don't think you would have missed that trade if it looked like this. Guys, if you're brand new, James, Mike, who else is new in here? Da, 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 da. Do you see on his chart, and I want you to look at it. Let me take a picture of the picture. Gary's given us the most beautiful look. And I'll tell you what, we'll use the checklist for it. And since it's one of those 50-50 trades, it's one of those areas not quite broken but has the potential to. This is one of the neat tricks that you can use with Snagit. Odds favorable on the 13-2? Absolutely. Get me that arrow a color you guys can see it. There we go. Small's outside of the large on the small chart? Absolutely. No divergence? Absolutely. From a good top or bottom? Absolutely. Enter at the area. And guys, this market didn't stop until all the way down there, till all the way down here. This is 100% textbook, straight out of the KISS plan. Guys, this is one of those trades that you have to learn how to not miss. And Gary would have caught that trade 100 times over. His chart was just a little sideways. Another thing posting in the room does is it helps you recognize when your charts are a little sideways. And then Cam, odds, this is the same trade. Look at that entry. I get excited when I see these. Or Cav, sorry, not Cam. Saw Cam's name out of my left eye. Cav, day one. Oh, you're still on sim. I thought today was going to be day one. It's just another day that ends in Y. Oh, January 1st. Okay. Strong triggers going down on both charts, took a pullback to the triggers on the 13-2. Remind yourself that the termination created the reversal, right? Remind yourself that there was no divergence. Write it on your charts, Cav, especially as you gear up to get into that January 1st start date going live. Write everything that you see on a chart, because what you're going to find is if you really go through and write it, and this is why I was telling JW as well, if you really go through and you write on a chart what it is that you see, everything becomes easier to see. Everything becomes easier to recognize at a moment's notice. And there's that NASDAQ. Same thing. Weak triggers, add a fib. How do you write on other areas on the chart? Which chart pictures are you taking, Cav? Are you using TechSmith Capture or are you using Snagit? Because it looks like you're writing on your NinjaTrader 8, right? So use Snagit. God, just capture it with Snagit. Go to the call out, and now you can do it everywhere. You can put call outs all over the chart, right? So anywhere you want. You can do shapes anywhere you want. You can do arrows. Like, I mean, you can vandalize a chart with Snagit. Yeah, just do more than one. You're not limited to one. Not at all. Does everybody see how weak triggers right at a fib that it couldn't break, coupled with divergence? Look what the market's doing. You guys had rules to keep you out of any other shorts. Gary, here's your channel, brother. Large chart defines it. And this is great for you guys that are new to Nexgen to see this, I think. Why is rule number 2 so important? This market went from a termination to a mid-band, and the large triggers didn't follow, which is a termination, up to a termination, to a termination, to a termination, to a termination. There's one of those 50-50s, didn't work, and right back to support. Rule number 2, guys, keeps you from getting caught up in this. Rule number 2 keeps you from trading a market that isn't lending itself to being very tradable. And if I get rid of all these lines, not one instance where I see a tail with odds favorable momentum and a clear path, right? Not one. And this is the large chart. So Gary, when you put channel on yours, channels don't happen on small charts. Channels happen on a large chart. Channels happen on the chart that leads the way, leads the direction. And I just wanted to say that about yours, and I think this was the one that said it, is that's not a channel, right? That's a small chart fluctuation. The large chart says termination. The large chart says odds favorable. And if you let a smaller, faster chart define something so important as an untradeable area, you're going to find yourself having challenges. He's saying it's a range-bound market. It's caught within areas. And it's really not, is it? It's areas with the potential to break because of momentum and a great top. What you're seeing is that little fluctuation, Bobby. And let's do this again, just again for the new users. 1 bar, right, is all of this. So wouldn't it be easy to just go, oh, the market's consolidating? No, it's not. It's odds favorable into a termination. Let the large chart lead the way. Does that make sense? Focusing on the small chart is going to kill you when you're trying to trade the large chart. Here's a good example of a medium probability scenario, guys. I don't have the strongest triggers, but I do have a clear path. I do have an area inside of favorable large triggers. If I go back to my advantages, bum, 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 I'm without momentum, which means I want to insist on the other two. I want to make sure that I have the best of the best on the other two. Guys, this is an outstanding medium probability trade. All of my triggers are above support. Support is likely to hold based on my termination condition rules. It lines up with support inside of favorable large triggers, but without the momentum, I know that I may have to manage it. But if you got in at 64, guys, you made your $300. Anybody catch that long? Does anybody not understand how it is a medium probability of trade? A trade where an issue exists, it just has to be managed assertively. Odds favorable momentum. Clear path. If I get a reversal bar, do you see how quickly that happened? But it hit resistance. James Bird, how we doing, brother? Feeling okay? Any questions? Mike Lynch, how you feeling, man? It's a lot day one, right? It's a lot on day one. I know it is. I've been on day one, just like you guys. Keep it simple at first, guys. Embrace the idea that you don't have to know everything. Um, Start with direction, guys. Is it going up or down? Is my background green or red? Make sure that you associate green with up and red with down. And once you do that, move on to strong triggers. Is there separation? Is everything wide? Or do I need to wait? These 1 and 2 typically take you a day. And then you spend a little time studying termination conditions. And this is where taking pictures is huge. Not just taking a picture of a termination condition, but writing on the chart. Price reached the area. None of the triggers broke. I don't have a clear path. Both small and large broke. I now have a clear path. Once you piece these three together, we're just going to refine to the entry, guys, inside of favorable large triggers. You don't have to know it in a day. When you were a brand new engineer, freshman year, going to engineering college, you weren't building bridges, guys. You were building a foundation so that one day you could build a bridge. When you were in medical school, you weren't performing appendectomies in your first year. You were learning biology, so you knew where that appendix was, right? Trading is no different. Give yourself a little grace. You're brand new. Take your time. What we do works. You can test it in the first week. Your demo isn't going to make you a great trader. Participation is. All right, who was this? This was Carl. Second lower divergence. Expected a bounce. How did that expectation work out for you? Can you tell me what rule you broke? And Carl, I hope you're okay with this. I'm going to use you as an example. So let's write rules, okay? And I know you probably have rule about a second lower divergence. I don't, and that's okay. So let's go through the very basic, right? Did you have odds favorable momentum? Smalls below the large wide. I would say without a question, that's the best look of momentum that I could ever hope for. Would you agree? Cool. So let's play this one little game. Rule number 2 says no terminations. And this is where I think annotation is so important. Not only did price reach support, and not one trigger broke through. You see that, right? So rule number two isn't met. And that's, I'm not saying that that's a bad thing, right? With all that momentum, maybe there would be a retest. So let me help you with a couple things beyond that. You have three fibs, no triggers, and divergence. That's powerful. And terminations come from here, but this is just confirming it with the divergence. And then look at your range chart as well. You get an antenna bar with stranded sellers from support. And not only did you get that, you also got a breakout bar that created an HVA. All of this is kind of confirmation that this bottom is struggling. You took a great entry and it was low risk. And with that much momentum, certainly there is the potential for a bounce. But when it lines up like that, when it's a perfect storm on every chart, Carl, with those terminations, that's where I don't anticipate the bounce so much. That's where I sit on my hands and I'm like, man, I'm just going to relax. I'm going to kick back and maybe I'll look for an opportunity to go the other direction if I get that information. That second lower divergence, yeah, did great to get you right to the trouble spot. And then I'm not sure what happened there. Probably too soon. But for me, when this does hold with that much momentum and every chart agrees, I think that's the one that a lot of people took right there at 30 and then had to manage out. And you didn't take the 50. That's interesting to me. That you wouldn't take a 50-50 from a good bottom with one divergence, but you would take it into a termination condition with one divergence. There's a twist. Isn't that interesting? When you slow down and you kind of go back, because I did the same thing, Carl. This is why I recognize this stuff, because you guys are just making all the mistakes that I've already made. When you won't take this trade with the potential to break, but you're all about this trade directly into it, that's a great note to put on a piece of paper. That's pretty cool. Thank you for sharing that. Because we all do it, just not everybody's brave enough to post it in the room. You like the first look? I love it. And see, this look I wouldn't, I'm uncomfortable with. It doesn't mean it's wrong, I'm just uncomfortable with it. But this look, all day, every day, coming from that one. I wouldn't even hesitate on this one. I would already be long with my stop in place saying, you got to come get me. And that's the beauty of trading is, what you're comfortable with and what you're not comfortable with can be two very separate things. I can tell you my comfort level has changed dramatically since I've started really going intensive with my brother. Um, it's been a lot of fun. Great. I think it's a great look, man. And remember, guys, I don't judge your trades. We just talk about advantages. Gary, probably a little overrun. You think? Weak triggers, they don't really break. Divergence, probably a little overrun there. Everything rolls and heads back above. That's kind of your first shot if you're going to take it. And then you get that little 50-50 look up here. But with the HVA, that's not so bad. It's weird, guys. There's some times where the lines they're just gonna kill your party, and there's some times where they're gonna help your party. And the more time you spend with the software, the easier it becomes. It's easy to say, "Hey, look at that," but when you look at, there's no areas inside of favorable large triggers. You're larger below everything. You're smaller above, and that's not your best termination. I'm totally on board, not getting into that one. And Gary, it looks like you're being conservative today and it's paying dividends. $600 on the day is not a bad day. And guys, if you feel like $600 is a bad day, 1.5 hour a day, make one trade, 200. That's not a bad way to make a living, huh? Not a bad way to make a living. What do you guys think about that? Weak triggers, termination, ugly. I think that's what people forget, Cav. If the best you could do on any given day is $500 a day on a two lot, that's still a $10,000 month on a two lot at 250 per contract a day. That's not a lot of money, guys. I think the challenges come into place when we try to force the market to give us what the market doesn't want to give us. When we try to take every trade instead of the best trades, right? Because that 10K, if you double your contracts and trade the exact same plan, there's your $250,000 right there. 250 per contract. And I think this is one of the things between 9:45 and 10:30, right when the market opens, right? They take a second to scramble, and then somebody usually wins. And guys, sometimes nobody wins. There's not a damn thing to do on the S&P. Does everybody see that? From term to term to term to term to term to term. Mark, how am I going to make money like this? You're not. We're not in the point to make money when there's no rules. We're in the point to not give it back, to not lose money when there's no rules. And you're going to get bored. I haven't been in a trade in an hour. I'm going to manufacture something. I just sat down and I think I see something. I'm going to manufacture something. Guys, I'm telling you right now, if you embrace the rules, you did not take a trade on the S&P today. If you're embracing rules, you probably got short on crude oil. One trade since 9. I think that's it for everybody. If you're embracing rules, you didn't go short with a green background. Look at how it's messing with you guys. Isn't it pretty outstanding that all you have to do is be patient? All you have to do is wait. Look at crude oil going down. There's your first 50-50. There's your second opportunity. There's your third opportunity. Notice that all of them have odds favorable momentum. Cattle futures, why not? You can do it with soybeans. I like the first look, personally. I love it when one-to-ones show up. They all had divergence. It may not be your trade. What's cattle? You guys have any idea? Yes, it is, Cav. I almost wrote beef. Let's see if we can find cattle. Feeder cattle or live cattle? What do you think? We'll do feeder cattle. All right, and I'm going to build a feeder cattle chart, guys. And I'm just going to build a large chart, and I don't know how it's going to work. I've never actually looked at feeder cattle. But I'm going to build a 13-2 chart on my feeder cattle. And we're going to see if patterns repeat themselves. So this is cattle. Weak triggers comes up. Second higher divergence. Who talked about this one earlier? I like it. Odds favorable. There's a pullback. This is all today. It's got some movement. I like that. I might have to build a 5-1 too. Everything breaks. There's a tail. Support breaks. Acts as resistance. Down it goes. 50-50 trade pushes up. Doesn't work. 50-50 pulls back to the mid band. Nothing blinks. Weak triggers. I may have to start trading cattle. Guys, look at that termination condition to the tick. I don't know. Let's find out. Which way is it going? Looks like it's the same as S&P. 1250 a tick. You guys want to build a 5-1 and see if there are opportunities on beef? How cool is this? Same patterns, guys. This is what we do when the market isn't doing anything. We say, well, yeah, the patterns do work. The patterns have no idea what market they are. None. All the patterns know is momentum and clear path, right? And I'm building this on my S&P workspace, but let's take a look. I have never in my life looked at feeder cattle. And I don't know if it's going to be good. But this one fit the rules, didn't it? What do you guys think? Am I crazy? Clear path, small outside, pull back to resistance inside of favorable large triggers. Is it just me, or is that a beautiful trade? There's your first opportunity. Not the best look. And then you get the 50-50. And it dances a little bit and continues down with the momentum. And then let's see what happened at 9:30 this morning. Termination creates a full reversal. Full reversal creates odds favorable. 50-50 with no divergence. I wear a cowboy hat anyway, Gary. I'm in Texas. But guys, do you see it? It's the exact same. That's feeder cattle. The patterns are the same. All you have to do is learn the patterns. They don't know that it's feeder cattle. Let's look again. Let's just keep looking. Here's one of your costs to doing business, but I want you to see something about this. GF. Guys, look at this. Odds favorable, clear path, everything says down. That was your entry. Just below resistance inside of favorable large triggers. That was your risk after the reversal bar. You took a loser here, guys. You took like a 6-tick loser because the area where it was supposed to bounce still created a bounce and a reversal bar and let you get out. Manageable trades. This is kind of cool. I might have to trade cattle just for the fun of it. $11.08. There it is again. Bingo bango. All right, guys. So that was feeder cattle. Thanks for saying that, Gary. That was kind of fun. The patterns work. The patterns don't know what market you're trading, guys. Learn the patterns. Focus on the patterns. Focus on the process. The process will yield results. How are my new people doing in here? No offense, old folks. How are my new people doing? You are the guys that I'm concerned about right now. How are my demos doing? Which currency? Give me a tick. Are you curious about the yen, dollar? Which one do you want to look at? Let me find it. Guys, I'll do this all day. If there's no pictures to post, if nobody's getting JPY is not there. Let me find it. Give me 1 second. I'm typing off on the sidelines here, guys. 6J is the Japanese yen. So how about if we do 6J? Is that cool? Let me put it over and we'll build a large chart for 6J. I know John has built stock charts for people before. And guys, there are markets that sometimes don't have enough volume. Sometimes they don't have enough data going back. So I'm taking a very basic approach first, and we're going through. Yeah, something's not right about the yen there. And this would be one of those instances where 13 to 10 days. Yeah, Michael, I like to get in and get out. Um, Cav, I believe you can just type it in. Let's see. Deleting old chart, simulator, add symbols, roll contracts. I can do it on 7. But I think you can just type in what you want, Cav, and it works. Yeah, I'm not sure what's up with the yen. I've never built one, but that one would take a little research. I think, Michael, I'd love to see it. Build some, play with them. Let us know. Um, you want to have the volume and you want to have, there's got to be liquidity, right? There's got to be somebody on the other side of your trade. Like we did orange juice last week too. We were having a trading places moment. Currency is great after hours, Gary says. So if you're looking for opportunities outside, but guys, look at this, one tick off of the term, and that's what reversed it. Pretty cool. And once again, it's holding. And then, Carl, that was kind of your theory, right? Strong in retest, huh? And then S&P is not doing anything. No, I see it, Carl. And for me, a lot of the times, it's not a trade that I take, but it keeps me from looking the other direction. John Novak and I were watching the market earlier this morning, and we use that exact same concept that you use to get back up there to keep us from looking for the short. Just a little different approach. There's somebody that's been working on using divergences on the small chart to take out reversal bar markers on the large chart. There's a million ways to use the software, guys. You just find what works for you, and everything comes together. So, as we wrap up the second hour here, guys, I can't stress it enough. If you're brand new, I want to hear from you. And even if you've already committed, and I think what happens a lot of the times is people commit to the software. They start a lease or they purchase the software and they're like, well, I don't want to take from the new people in the room. Until you're done with your second or third year, guys, I want you to consider yourself new people in the room This class isn't designed only for people on demo. This class isn't designed only for people in their first 30 days or the people that haven't yet been funded or the people that only look for high probability trend trades. Man, this classroom is your classroom. And I want you you're always invited. If you ever reach a point to where your trading plan confuses the hell out of my new students, we may have a talk and I may push you over towards Traders Chat. But I try to keep it inclusive. And if you're trading outside of that high probability, that's where I just kind of ask you, do me a favor, write why you did what you did, right? Make it educational. Ron C is being very, very quiet today, but I'll tell you what, me studying his trades in this room opened up another trade for me. And it's pretty cool. He taught me. So make sure that they're lessons. And guys, I'm going to leave you with crude oil. It's like going to the practice range, right? Just come out and hit balls. It doesn't matter if you're a scratch golfer or if you're not. Which reminds me, golfing this week. It's our last sunny day on Wednesday. Guys, I'll be back in about 5 minutes, 6 minutes, 7 minutes, 8 minutes, 10 minutes. I don't know. We'll see. But I'll be back in a few. If you have a question, post it in the room. If you have a comment, post it in the room. If you have a need, post it in the room. DJ, how are the charts coming along? I saw that you were with Tech, right? Is there anything I can do to help, man? Because All right, y'all. Home stretch. Here we go. Last hour. Bum, 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 bum. Let's talk about a pattern. I'm going to find as many lessons as I can in the market. This one is called the gap theory. And this is a pattern that you're going to recognize every day. Excuse me, no matter what market you're trading. When price accelerates away from those large triggers, smacks into a mid band. This is when your mid band is behaving as a termination condition. When you go to the tops and bottoms section, a large chart mid band if the large triggers are a full bar away. And that's exactly what just happened here on crude oil. Price accelerated and reached that mid band. This white bar, that white line, is what we call a reversal bar marker. That is the point at which the current bar becomes a down bar, a reversal bar. If your large triggers are below a reversal bar marker and price hits a mid band, the mid band is a termination condition. There we go, guys. This is a pattern that you're going to see all the time. This is a pattern that repeats itself on every market. This is a pattern that's going to keep you from trading into a midband that may be behaving as a termination condition. And there it is. Pretty awesome, right? Exhibit A. This is what we're doing every day, guys, is we're learning these patterns so that they become easier. It keeps you from beginning to think long because you know that the bid band is likely to hold, that you know that it's likely to close the gap back to the large triggers. Gap theory is huge, guys, and it's going to keep you out of trouble. It acts like a vacuum. The smalls did not smash. They kind of eked their head through, and divergence prints, and it pushes you beyond the best area. There's that textbook termination condition that creates the reversal. What do you guys want to talk about? And guys, the S&P is an absolute mess. Not doing a darn thing. I wonder if... Did the S&P roll? No, we're still 1223. I'm just making sure I didn't accidentally open like an old workspace or something. Terminations for the win, guys. Rockstar. What do you want to talk about? DJ, what are your charts doing? Maybe I can help. So let me do this. From the software user guide, DJ, when I'm really having troubles, one of the things that I'll do sometimes, and until you do it once, it feels like it's a lot, but it's really not. Deleting old charts and templates and just starting fresh. Guys, there's nothing wrong with giving your software an enema every now and then. Going through, getting rid of your old charts, getting rid of your templates, and then from the resource page, come on, resources, just do a re-download. Start fresh, 100%. Get rid of your data, get rid of everything and start fresh. Sometimes your computer just needs it. Sometimes that little reset makes everything right with the world. So, DJ, you could try that if you're comfortable with it. I can help you with it if you need it. Chef, how's your trading? Hopefully doing well. Craig, how's it going? I know that you guys committed. I want to make sure that you're still doing well. Jose to P, hopefully. Things are awesome. Miss Debbie, you're on the tech now? Awesome. It hasn't been clear cut today, right? Very nice, Jose. What's your goal for the day? Done. Beautiful. That's hard to do. That's why I asked. It's hard to do. To find yourself over your goal and then you just want to keep trading. Superman. Tony, beautiful. All the momentum. Let the bar close below the mid band and just ride that thing. Tony, I love it. What a great trade. Momentum leads the way. Gary says goal setting. What is that, a Miata? That's cute. Kid. Love Corvettes. This is where I go wise grandfather. Ready? You can wish for a new Corvette all you want. That's a pretty good way to get to a new Corvette. Right? Wishing for a Corvette won't do it. That's a pretty good way to get to a Corvette. Remember that the process leads the way. Process is going to get you there. Not the want. I wanted to be taller. Amen, Ron. It didn't happen. I wanted to be better looking. It didn't happen. Look at that. Mid-band as a termination. Ba-boom. Down it goes. God, I love patterns. Watch this. This is where we inflate Ron's ego. Where did it go? I took the perfect Ron trade. It was just market replay. I did a lot of market replay this weekend. Was that it? That was it. Look at that one, Ron. Price clears the fib. Tony, this is for you, brother. Boom, boom. Guys, market replay allows you to take things that you wouldn't normally take. It allows you to test things that just maybe aren't a part of your plan yet. And I'll tell you what, I'd like to say that everything's easy for me, but that trade was one of the hardest ones for me to grasp. It really was. I ruined it every chance I got. And then just through market replay, it got better. So, everybody have a good Thanksgiving. Hopefully, all you guys are still full. It really is. Well, once I have rules, I'm pretty good. Debbie, mine was amazing. Thank you. We went down to Austin and took our boys out to lunch, um, and just really enjoyed the day with them. Oh, very nice. Very nice. And then Dwight, you had some momentum, but not a clear path. So you just scalped a little bit real quick. Million ways to do it, right? When it starts with momentum and all your charts agree, it sure does make it a little easier, doesn't it? Half a tick each, though. How much of that was in commissions? Do you guys remember that you pay commissions, right? And I think it's 18 a round turn, which means you probably made 30 bucks a contract on that one. So remember that when you're doing your scalping. Make sure it's worth it. Room to your target is always a good thing. What part of Colorado, Debbie? I lived outside of Boulder for a year. Had a blast. Learned to snowboard. Did a lot of hiking. Colorado Springs. So beautiful. When we were driving back from Washington, we stopped in Colorado Springs, went and did Garden of the Gods. Absolutely stunning. Snowboarding is. I think my snowboarding days are over. Oh, very cool. One day I'll have the grandkiddos. Not yet, though. I'm okay with that. I'm okay with little paws. 5? I don't know how you have 5 grandkids when you're only 29, but you know what? I'm not here to judge. Market's trying, right? It's definitely the day after a holiday. Hopefully. Try the afternoon session. Yeah, I'll probably, when we're done here, I'll fix some lunch, hang out for a while. Try it again at noon central. Hopefully it picks up a little bit. Man, if you're on the right side of things, then today it's a great day for you, right? A lot of times the rules are going to keep you out of these problematic days. Um, can't stress it enough here. There's just no reason. If you think there's indecision, you can visually see it a lot. And I know, Dwight, you scalped a little out of there. Don't ever trust areas inside of a 5-1 trigger. Dwight, well, actually, that sounds like trading advice. That's not what it's meant to be. Trust your large chart, right? Everything says down, the momentum is down. There's a problem here, right? But you're coming off of a termination. Your smalls are below the large are turned, your synthetics are down, your large is down, your mid band's down, there's no divergence, right? It's not just that area inside of the 5-1, it's the accumulation of everything. And this still might hold, right? And you knew that, which is awesome. You guys remember the old bar fight scenario? This was your bar fight, Dwight. Divergence at a term, large down, smalls through the area, everything down here, no divergence. And it was all that against this one area right here, right? And especially since you've watched it bounce, you know that this isn't a home run, right? I think that you did it beautifully. I think you did it wonderfully. And I think that your great entry was predicated with the large chart saying you at least had a shot coming from that area. And that's the key, I think. Like just a mid-band inside of triggers, because I mean, there it is, and there it is, right? And there it is. But when it all comes together, it's magical. When all the charts agree, it's freaking magical, even if it's not for the home run. Great job. These guys overran a little bit, didn't they? They gave you momentum and they gave you a clear path. Whew, they just pushed a little bit beyond. 2 divergences suggested it. Good stuff. Sydney, we doing all right? JW, how you feeling? DJ, hopefully you got it coming together. Walter, Hammond, Lava Lamp, Joel, Carl, Bobby, George, GWC. Stump me. Let's do something. I can go Mike Silence. We can just watch the market. Are any of them odds favorable into the areas? Produces a bounce. Is it crazy? Didn't we know though, Dwight? Didn't we know that when price reached this line and absolutely no triggers break through it, it's likely to create a bounce? It's not crazy. It's a pattern. Guys, that's your rule number 2, textbook. The same reason, Dwight, you knew not to go long here, right? The same reason you didn't go short here, or long here, or short here. Egads and little fishes. You guys have the keys to the kingdom. It is crazy beautiful. I'm floored. I'm still floored every day. I teach it, guys, and I'm blown away at the effectiveness of the software. You just have to learn to read it. You just have to learn to read it. That's all. And once you learn to read it, you'll be amazed at what you come up with and what you see. So since there's nothing going on, this is where I start soapboxing a little bit, guys. To minimize your learning curve, post pictures in the room. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? To be sure, you need feedback from us, guys. We're here to help. Me and the mouse in my pocket. If you place a trade on the simulator, you participate in class, you can't lose money. You need someone to tell you what you did right or wrong when you're new. It's part of the educational magic, guys. You have the advantage of a one-on-one session every time. ES headed to the white bar. There's a divergence. 63. Ron, I don't know if your theory works in a range-bound market. I have a feeling we're going to find out, though, huh? Worked there, worked there, worked there. Maybe not here. We is about to find out. So termination coupled with divergence, you expect it's going to get a little more push. Well, that sounds like somebody's formulating a plan. Nicely done. Might take an hour, no kidding. Guys, post in the room. Can't stress that enough. All I want to do is help you guys. That's like my whole goal every day. Have you guys seen this? Carl, take care, man. There was a user that created this when they were learning Nexgen about 18 years ago. And this was pretty cool. This was their accountability spreadsheet. I stole this one. John put it in the other room. If you miss a good entry, you have to sit on your hands for a minute and do nothing, is what he was saying. If he entered late, it was 2 minutes because it means that he was second guessing his methodology. If he exited for no reason, 3 minutes. Moving stop to lock in profit in the middle of nowhere, 5 minutes. Exiting late and giving up most of the profit, 7. Trading against direction, 10. Trading against an area, long into resistance, short into support. That was a 15-minute timeout. And then trading against area and direction, he was ejected from the pros room. We used to have a pros room where when you had gone through the initial classes a couple times, and had gotten comfortable. I love this. I read a book. It was a pretty cool book, and it talked about if you take a loser that doesn't fit your rules, your next trade should be on sim. And I thought that was brilliant. Cav, there's that termination. Once again, right into it. Oh, how do you hold that one? Oh, heartburn, Cav. So close. And then Cav once again. Yeah, and just a little early here, right? Just a little early. Get to the, on NASDAQ, get to the right side of those smalls. Oh, it just takes so much stress out of it. You know where it's probably going from, right? Your chart reading's outstanding, Cav. That little bit of patience, just get it to close on the right side. Let those small triggers slow down. And then the same thing here. Those super strong small triggers, get you close on the other side of them. Does that make sense? This is huge for NASDAQ. And I think what a lot of people forget about NASDAQ is that NASDAQ, it's not done, Ron, is that NASDAQ, and let me show you guys, your 13.2 chart, this is normally your large chart on any other market. But because the NASDAQ moves so fast, your 13.2 chart is your small chart. Your 34.5 is your large. So the same way, and let me go to the other one, not that one. The same way, it's kind of crazy to fight those super strong triggers here. Does this, and let me know if this is clicking for you NASDAQ traders. I don't want to go short against this look, right? That's kooky crazy. So that look is, where'd your picture go? Shoot dang heck. Is this look right here. It's okay to get to the other side of that momentum indicator. Um, for me, Cav, it paid huge dividends. Going through the pain of blowing out 7 or 8 Apex accounts, trying to learn how to trade the NASDAQ. And it came down to this. Everything had to do with where my small triggers were on the smaller, faster chart as to whether or not I would get into the trade at the area or wait for a close on the correct side. And it was the gap theory that helped a lot, is just where were they? And I'm sure that you've stolen, liberated, downloaded my spreadsheet more than once, but if you go through that yellow section that's called NASDAQery, you'll see a lot of instances where you get this little level of patience because of um, those super strong triggers. So I hope that helps a little bit. Man, what a day, huh? Termination, determination. I mean, they work. It's just taking a long time to get in between them, guys. Everybody's full of turkey. It's that tryptophan thing. Did you guys know that Friday is December already? Does anyone else get bummed on long holidays because they wait for the market to open back up? Get excited about it? I couldn't wait for today. Can't wait for May. Is that when you guys thaw out? Gosh, May. That's one of the reasons why I like Texas so much. Is last week I was in shorts and a t-shirt, and I probably will be next week too. I'll probably play golf this week in shorts. There we go. Looks like you are in business, my friend. So DJ, can I ask you a question? And you guys have to put your charts however you like them, right? If this chart leads the way every time, right? And I never look at this chart until this chart says to. And I don't know, Arabic may be your first language, but doesn't it make sense to make this one your primary chart rather than the first thing that you look at is trying to find an entry? Yeah. I did that once. I put my range chart on the left side, and I found that I looked at my range chart before I ever looked at my large chart. I think I've tried it every possible way. I read left to right, so when I do, I make sure that this chart says let's go, and then I look for an entry. And I'm telling you, there's some people that get focused on these. Okay. Can you not? So let me show you what I can do. So like if I click and drag, I've never click and drag this way. I can go to my other monitor. So when I take pictures of all three of my charts when I'm working with my brother, that's not it. Hold on. It looks like this. And this one's on a different monitor. So I'll click and drag on 2, and then I'll pull over to the next monitor for 3. And then cav, termination, reversal, momentum, perfect entry, straight to the trouble spot. Beautiful, beautiful. Oh, it will. Click it and drag. Click and drag, DJ. And then Ron, it did work to get you to reversal bar marker. You just chickened out, didn't trust the process, Ron. Got caught in those small chart fluctuations, didn't you? $600 day is not a bad day from 2 trades in a market that's caught in ranges. And Cav, your exit, I just, in case the kids in the room don't see it, guys, look at that exit right at trouble. That's the stuff that gets me giddy about how good this software is. No reason to hope, right? Absolutely no reason to hope. Take your exit. You know where it's likely to bounce, right? And then, well, I don't know where mine went. I had one from earlier. Yeah, I put mine like a tick below. And then when I get into areas, and guys, there's different ways to manage it. For me, if I'm hoping that it breaks, I'll never give back more than a bar. That's just me. Because if it pulls back and it's time to take a trade, I'll do it. But did you notice that gap theory, Cav? Look at where your synthetics are. There's your reversal bar marker, straight into a termination. It's likely to close that gap. That's the gap theory, 100% there. Not guaranteed to, but it certainly may. Look at that. They tapped the fib, didn't they? When the S&P breaks out, it's probably going to be beautiful. Look at that divergence high to the tick. Oh my gosh. Is anyone else just blown away? Odds favorable, clear path. Doesn't work out. 3 divergences in the same location. Push up to the divergence high. Divergence high holds like a mother scratcher. And it's down. And now we're waiting to see what happens. That's pretty outstanding, guys. Forgive me if I sound like I'm tooting Nexgen's horn, but I trade this every day as well, and I'm floored. If you find better software, let me know. My brother said he'd buy it for me. Just got to learn how to read it. I know we're losing people in here. It's 39. 39 left. We were up to 52. Some people probably had to go to work. That 4-letter word, right? Ugh. Yuck. I'm one of those weirdos. I miss work a little bit. I like people. I like being in rooms with people. Makes me happy. 39 of us. There are. What do you guys want to talk about? Great question, Chef. There are not. The percentages are a byproduct of the calculations, and have no bearing on whether or not they are more effective or more powerful. My brother used to always say it's like being pregnant with divergence. You either are or you are not. You can't be sort of pregnant or more pregnant than the lady next to you. Yeah. But man, that one stuck with me though, because I used to try to assign weights to them. Um, and I just couldn't. And then Cav, another perfect entry, knowing that it may go down. And you said, but with all this momentum from a termination that creates a full reversal. Beautiful. Large chart says up, it goes up, huh? Nicely done, Cav. So, Cav, what's your thing? We started the day with this, so I'm going to ask it again since we're getting towards the end of the day. What do you guys do that, like, what's your Achilles heel? Mine is I enter early sometimes. I've gotten so good at reading my indicators that sometimes I forget to be patient and wait for them to catch up with my brain. And I get into trades early and I have to take them twice. I did it this morning. I took one trade this morning, but I had to take it twice. And my first loss ate half the profits from the second improper entry. Um, just trying to follow the trend trade plan. I like it. Yours is not moving your stop loss. I mean, we all have a thing, right? And it's okay to have a thing. It's okay to have something that's challenging. Um, Mine, the other side, and Chef, mine was kind of similar, is I would move mine. Guys, it took me a long time to get over holding trades, holding for bigger moves. Because even though the large chart said go, I was so terrified of it turning and coming to get me that I would just chum the water with stops and I would get out at the worst place possible. Um, and it takes time to work through that stuff. You've got to first recognize it, right? And then once you recognize it, you've got to commit to changing it. Over trading, Gary. Yeah, that's a big one. And over trading is a very fancy way of saying not trading my plan typically. Um, Over trading happens when you start taking the trades that you want to be in instead of the trades that you should be in. I know it was for me. Um, I might do 20 trades a day trading NASDAQ, but just making sure that they're all the correct trades, right? You can't overtrade. There is no number. Bored, so you went to sim. But see, even that's horrible, and in my opinion. Going to sim so that you can take trades that don't fit your plan, it's muscle memory. Um, your brain it has this conflict because half of it's telling you only take a trade when the rules are met. But if you're willing to get on simulator and go take ridiculous trades, aren't you telling your brain that it's okay to take those trades, right? Fear of missing out, Michael. That's trust. That's 100% trust in the methodology. Believing that it's going to make it back to that area inside of favorable large triggers. That's repetition. Trust is difficult to develop. That's repetition. I love it. We've all got something, guys. We've all got something that plagues us. Something that little angel and devil on your shoulders. One saying, "Hey Michael, get in early. It's going to go without you." And then Gary's is saying, "Get in all of them. There's money there and it's all yours." And Chef's is saying, just leave $1,000 on it. You're cool. What are the chances it's going to come get it? Little angel and devils, we've all got them, or whichever good and evil representation you feel as though you need. You thought you could figure out the market? I think, Cav, you and I are on a very similar path. Has anyone ever said it should? It should is probably one of the worst things that you can say as a trader because it means that you believe you know what the market's going to do. It should go. No, it shouldn't. Doesn't have to, right? That quote is now in the trash. Yeah, I try to. Every now and then it creeps in. I hate to admit that, but every now and then it creeps in. Isn't that funny? You'll hold your losers longer than you're willing to hold your winners. Because one involves hope, right? Hope's powerful. Hope is so, I hope. Chef, my early entry today that I took, I told my wife, I was like, if I had half a brain, I would have exited for 5 tick loss, right? Lost $100. Instead, I doubled that because I hoped that my bad decision wouldn't bite me in the ass. And I think this goes back to the plan, right? What is your management plan? Is it clearly defined? And Chef, I don't know if yours is. And guys, the management plan here is ridiculous. This is no way to trade when you can read indicators. But until you can follow a plan with the idea of money on the line, this is an outstanding way to trade. Because all it does is it trains your brain. If then, if then, if then. If this happens, then I do that. Um, and I think you guys will find that management doesn't have to be difficult if you have a plan. Did you really? What's different? That's interesting to me because I don't know anything about options trading. Um, that's interesting. Is it because you're more in charge of what you see now, maybe? That's really curious. Because now you're making decisions and you're reading and you're in the driver's seat, right? So let's just for grins, guys, what does it mean when price reaches that line to the freaking tick and not one trigger's gone through? It can be very black and white, right? For the brand new user, it means that there's a termination condition. It means that rule number two is not met. It means that there can't, on any way, be a high probability trend trade. And then what's the next level? Well, where's it coming from? It's coming from a termination condition. And I do have odds favorable momentum. But then we go back to not only is it a termination at '06, but it's an area that hasn't broken yet at 20. Do you guys see how we're just chart reading? So I do have momentum, but I have two areas that are problematic. And then just for giggles and poops, from the bottom of my triggers to the top of my triggers, I don't have any areas inside of there. So if all I do is focus on advantages, what do you guys think? I have momentum, but not only do I not have a clear path, I also don't have an entry area. If 2 out of 3 are missing, are you going to put your kids' college fund on the line? These are what we all work through because I hope it goes down because of the look. But now there's divergence against it as well. I hope it goes down because I'm going to take a short trade. Or maybe you're saying, I hope it goes up because I went long when that divergence printed and I'm expecting it to get to 33. There's people in this room that may have done that. One side has a termination condition and divergence from it. The other one has triggers down from a termination Who's right? What do you guys think? Are the longs right or the shorts right, guys? Gary, everything says up. You go up. Everything says up. Not a lot of wiggle room into that line, but once you let it react and go up, easy money. Nice job, Gary. Got caught in the garbage trying to be first. Story of my life. Hey guys, I guess what I'm trying to say is neither of you are wrong. If your plan says that you have the conditions met to go short, congratulations, you should be short. If your plan says you have conditions met to be long, to hold to a certain spot, then you should be long. If you don't have a plan, well, then you're subject to a lot of guesswork. And that creates problems for most traders. I'm going to give you guys a watch list. Some stuff John Novak compiled. Terminations, a lot of good stuff there. If you want some homework this afternoon, something to look at. What else do I have? Do I have any readers in the room? Emotion-free trading. Guys, this one changed my life. I love this little PDF. It's a little older, but the lessons in it are pretty outstanding, specifically the first two chapters for me. 7 Habits of a Highly Successful Trader. My brother told me to read that every day for 30 days. Looking to see what else I have that I can share with you guys. I got all the stuff. For those of you that are new, thank you for sticking through in such a slow market today. I appreciate that very much. This is what you're going to go through. It's going to look like fun, then it's going to feel hard typically on the first day, both of these. And then you're not going to have any idea, but you're going to stick with it, and then you're going to think that you have it mastered. And this is typically around 30 days. Thank you, Michael. And this is where Mike Tyson says everybody has a plan until they got hit. Guys, this is where I went live too soon. I think John put this together based on my path. I lost 5 grand almost instantly in the market. I'd spent 30 days. I'd never taken a picture. I had no rules written. I didn't know what it took to get in or out of a trade. And 22 emotional trades later, I was down 5 grand. And it wasn't a point in my life where that was a small amount of money for me. And I almost quit. And I came so close to quitting. I wanted to quit so badly. But I didn't because as much as I sucked at trading at the moment, I suck worse at quitting. I'm pretty stubborn. And then I did this, guys. And this was the same talk that my brother had. He called me and he said, "What the hell are you doing?" He said, "You've never posted a picture. You don't have any rules written. They're not easy. You don't know what you're doing. You've never used the spreadsheet. How on earth could you expect to be successful?" And it turns out I felt entitled because my last name was Novak. So instead of beating me up a ton, he said, "Let's get on the path. Admit that you're new. It's okay. Admit that you need help. It's okay." And he told me the same stuff I tell you guys. Guys, Tiger Woods has a coach. Wayne Gretzky has a coach. Michael Jordan had a coach. LeBron James has a coach. Steph Curry has a coach. Scotty Scheffler has a coach. I'm trying to pick all the sports here, right? I don't know any current hockey players. But everybody has a coach. And there's a reason for that because you need someone to look from the outside in to help you grow. That's my job. And then once you realize that you don't have it, that you're not entitled, and you start following the path, you'll get to the "I did it." I'll get there with you. It'll be fun. We still don't know if it's going up or down, huh? Ron, that was your target. So one side, all my long traders are out. Good stuff. Guys, is there anything else you want to talk about? I absolutely hate ending early. It bugs me. But nobody's talking to me, and that's okay because there's not a lot to talk about right now. You too, Cav. I sure do appreciate you guys being here. I don't think you guys understand how much I enjoy teaching this class. It's freaking amazing to be able to work with you guys to help you get to where you want to be. I appreciate the opportunity for you to show me what you're doing. And then if you are brand new, guys, I want you to embrace the idea that this really is, I hate to use the kids' terms, but this is a safe space, right? I'm never going to belittle or berate you. My goal is your goal. I want you making money ASAFP because I want you coming back to me with a friend under each arm and saying, hey, Mark, teach them what you taught me. Um, Embrace the journey. It's a lot of fun. Give yourself a little grace. Be new, and we can do it. We can get there together. I won't take credit for it, but we'll get there together. I love this classroom. I think it's great. I think it's a great community. But we're going to shut it down for the day, guys. If you're trading this afternoon, hold fast. Make sure your rules are met.